Hello traders, Gary Wagner here, just about 9 o'clock in Honolulu, 3 o'clock in New York on Tuesday, 23rd of June, 2015, and this is the daily report for gold and silver. We do have the US dollar surging again in the markets, precious metal under dramatic pressure, euro dollar basically falling out of bed. This, of course, in light of the fact that there's talk about a resolution to the current crisis in regards to Greek debt. Currently, we do have gold trading off about $7.60, trading at $1176.50. When we look at the lows on the day, we're currently pretty much near those lows, $1175.60, and in terms of our high today, $87.70. So traders, to give you an idea of just how powerful the dollar has been today, we're looking at a daily chart. You can see the market is currently trading 95.37, puts it up over a full percent on the day, or 1.05 points higher on the day. There's absolutely no doubt. We talked about the fact yesterday that we had identified a pattern, which is basically a three-river variation called a unique three-river bottom, and that's these candles right in here. This is absolutely confirmation. And in fact, in trending markets today, we did issue a buy signal in the dollar. We issued a sell signal in the euro. Now, how does that relate to gold and silver? Well, we also did some studies that I want to talk about specifically in silver. We'll go into the gold studies that we've done in a little bit that are really pointing to lower pricing within silver specifically. And let me pull those charts up. So traders, there are a couple of very compelling charts which have really illustrated or defined to me what the overall trend has been within silver. There's no doubt this, of course, is a linear regression that we're looking at, and I'm going back in terms of time cycles long enough to really look at the really big picture or long-term trend within this market. And of course, the long-term trend we're looking at is off of a daily chart, but it is going back quite a ways, going back roughly 1 year in time. So when I changed the parameters for the linear regression, and what I've done here simply is move that to 25 bars in terms of our look back cycle, so 25 days as opposed to 255 days, we clearly see the defined short-term direction of the market is absolutely lower. But traders, as best as I can ascertain at this point, and I'm basing this on our half-a-day Japanese average charts, my current projection in silver takes us to roughly the low 15s, anywhere between, call it $15 per ounce up to about $15.25. But traders, here's the real caveat and the reason that I did not actually issue a formal sell recommendation in the market. Although I absolutely believe that this is where we're going to see silver in terms of pricing terminate. What is unclear, at least in our current count, is whether or not we've completed some sort of a wave 3 and are going to enter some sort of wave 4, maybe taking us as high as 1650 before moving lower. This projection is basically a projection of the termination of our fifth wave. We do know that we've terminated our third, but we're still ascertaining whether or not we are going to see this market move higher before moving down or continue in this downward manner that we have seen recently. The other technical indicator, which is absolutely giving us some insight right now, I believe is the MACD, because we saw it really try to enter a buy signal. And when we look at this is what, about the middle of June, you can see that the market did clip up. It moved from what, maybe 1575 up to about 1575 up to about 1630, 1635 in that area, but has now begun to come down. And there's no doubt we have the potential here for a continuation of this selling, and that's my only reluctance. We will issue a formal sell signal and trigger once we have confirmation that we have really exhausted any upward movement in the market. So let's take a look at the gold market. I am actually more bearish on gold currently than I am in silver in terms of the actual patterns that we've identified in the market. We'll start by looking at the 720-minute half-a-day chart. It is in Japanese average format, also has MACD. Absolutely, we've seen our cross in the MACD, and this is signaling lower prices, no doubt about that. Secondly, when we look at our linear regression, in essence, our channel lines Our short-term channel lines, these are set at 20 cycles, so about 10 days. We've absolutely had a clear and defined breakout below these particular lines. In terms of our active count, again, half-day chart, the way that we're looking at it is we did hit a top up at 12:30. It started our 5 count or bear count down, 1, 2, our long wave 3. We do believe that we have concluded our wave 4. Of course, that was composed of an A, B, and C. That would be the subcount within there. And we absolutely, let's go ahead and erase this, but we absolutely have clear identifiable pivot points in which you see candle size. On the average, the candle size is so critically important. You can see it begin to diminish here and here. That tells you that the actual strength in the trend is starting to wane. You get your pivotal doji candle right here, and this is really giving you your sell signal at around 1200 or even as low as maybe 1190. We have been shy about entering this market because we have seen this market trade in such a sideways manner. But at this point, the market is just beginning to come off of those lows, currently trading though at around 1177. If we close at these levels or below, and when I say these levels, I'm talking about market not being able to close above 1180, 1181, in other words, the top of this line, we would definitely signal a defined trading signal, a sell signal, although for aggressive traders, you can initiate that position at this point. This has been Gary Wagner wishing us always good trading. We'll talk to you tomorrow for another daily update review. Bye-bye.